Nancy Pelosi discloses buys of Nvidia and Broadcom. Nancy Pelosi and or her husband are honestly two of the top traders out there and better than 99% of stock market traders out there, okay, on Wall Street. So we're going to speak about this. I'm going to kind of give you my perspective if I like this buy or not, okay? Then we're going to go ahead and I want to react to this. Nvidia CEO takes advantage of year-to-date price surge, sells 1.3 million shares. So we'll speak about that. I think that's an important thing to react to. And then last up here, one day ago, the AWS CEO, he went on Bloomberg and spoke extensively about where AWS's business model is right now. So if you own Amazon stock, if you want to own Amazon stock, it's an extremely important interview to listen to, react to here, and see what's actually going on out there. Okay, appreciate y'all joining me as always. Thanks so much for being here. Happy 4th to all folks watching this on the 4th here today. And also the sale for 1000xstocks.com, that sale is going on right now. I'll put it as the pinned comment down there. It ends in, it ends tonight. So if you want access to that, that will be pinned comment down there. And once it's over, it is over. Okay. Alrighty. So Nancy Pelosi discloses buys of Nvidia and Broadcom. A new congressional trading form filed by Congresswoman Nancy Pelosi disclosed that she bought positions in two semiconductor giants last month, while changing her position in Tesla and Visa. Might actually made a mistake in regards to getting rid of Tesla, because we know Tesla's gone on a very big run here recently. According to the form, the Congresswoman, representing the 11th District of California, purchased stakes in Nvidia and Broadcom. She bought 10,000 shares of Nvidia worth between $1 million and $5 million, so that's actually a pretty big number, while she disclosed buying 20 call options with an $800 strike price on Broadcom and an expiration date of June 20th, 2025. The value of the stake is also between $1 and $5 million, according to the forum. Okay, interesting. Then she also, I guess, sold some Tesla worth between $250,000 and $500,000. So that was like a smaller move, and sold some Visa between $500,000 and $1 million. So that was also a smaller move. Okay, so yeah, the Tesla is likely. The noted transaction date was between June 24th and July 1st. So she made a mistake in regards to selling those 2,500 Tesla shares. No doubt about that, right? No debating that one. Definitely made a mistake there. Now, in regards to buying Nvidia, do I like this move? I got to say, yes, I really do like this move. And obviously, she seems to be a little bit more of a trader. And once again, it's her or husband. I don't know who's really operating the whole deal, right? But the bottom line is, I actually do like this move. I think Nvidia sets up pretty well for the short term. When I say short term, I'm talking really over the next 6 months. And obviously, Nvidia sets up well for the long term. They're going to go through a really tough period at some point, but that might not be till 2026, 2027, 2028. So when Nvidia has to kind of deal with, insane comps to comp against, they haven't reached that level yet. And then suddenly they might have a sequential slowdown in some quarters. And so that will be a tough moment Nvidia will have to go through. But that's not this year. That's honestly not next year either. That's maybe 2026 or maybe 2027. So I actually like this move by Nvidia. I think that will be a money maker for her. Broadcom, I don't have a strong opinion on Broadcom, just to be quite frank. And so I don't want to say, that's a good move or bad move in regards to that, but I do like the Nvidia move. And that leads us to this situation. Nvidia CEO takes advantage of year-to-date price surge, sells 1.3 million shares. Nvidia CEO Jensen has sold 1.3 million shares of the company stock over the past week, taking advantage of the 155% price surge it has experienced year-to-date. Nvidia shares were up another 4% on Wednesday. Jensen reaped about $169 million on the shares, which were sold during a period of June 28th through July 2nd, according to the form filed with the SEC. The share price ranged from $118 to $127. It is the first such sale by Jensen in 2024. This company has thrived, producer, we know the success, right? So my thought on this is, it also makes sense, even if you feel like Nvidia stock's going up. Like, you've got to, one, I know Jensen gets hit with big tax bills, right, as all rich people do. So that's a whole situation you got to account for there. Additionally, if you're very wealthy like this, you want to buy some stuff, I guarantee you, he likes to buy some stuff. I don't know whether that's a new mansion or a new fancy condo or a yacht or a new plane or whatever it is. Okay, the bottom line is, people like this that are ballers like that. If you got all your money tied up in stock, what good is it? You gotta cash some out so you can go buy your stuff with it, right? And so that's kind of how I always think about this. In regards to why people sell a stock, there's a million different reasons why a CEO would sell shares of the stock, right? But at the end of the day, there's only one reason why they buy a stock, right? And so when I look at something like this, $169 million, sounds like a lot. It's nothing. It's literally nothing. The guy has like $100 billion plus of stock in Nvidia. Let me look at Jensen's net worth here. Jensen, net worth. And let's see. The guy's worth $107 billion. $107 billion, and the far majority of that is tied up in Nvidia stock. So to sell 167 million is literally nothing. If he was 16 billion, then it'd be like, ooh, okay, that's a pretty big sale, because the guy's worth, 107 billion. He sells $16 billion worth of shares. So I'd be like, ooh, okay, maybe there's something here, right? 169 million? It's literally nothing when you have that sort of net worth. It would be like me going and selling like, I don't know, $50,000 worth of Meta stock or something like that. It's all in relation to your net worth. And so this is not a large amount. So anybody that's going to read this and be like, oh, this means Nvidia's downfalls here, Jensen sold shares, it's just ridiculous. Just ridiculous. Because listen, in regards to CEOs selling, listen to the CEOs I'm going to tell you sold stock over time, okay? Jeff Bezos has sold Amazon stock over time. Steve Jobs sold Apple stock many times along the road, right? Zuckerberg sold Meta stock many times over time, right? Jensen sold Nvidia stock over time. I could go through every single one of these trillion or multi-trillion dollar companies and take you through these CEOs selling shares a year ago, 3 years ago, 5 years ago, 10 years ago, 20 years ago, 30 years ago, okay? And look what these companies have become. And so at the end of the day, if it was all about just maximizing this in the dollar amount, honestly, all those CEOs would be better off just holding their shares, right? But you like to buy stuff, right? You only got one life to live. And so if you want to go buy that yacht, I'm sorry, you can't buy it with Nvidia stock, but you can buy it with cash money, right? And so just a little food for thought in regards to that. All right, important video to react to here. AWS CEO talking about their business, where that business is at. It's very important for all market participants to hear what's going on there, because AWS is almost the backbone of a lot of companies nowadays, right? And see what's going on here.
So and how quickly have you tried to implement changes that you think were helpful or important at AWS?
Well, thank you, and thanks for having me this morning. It's been a great first month. I've been diving into various teams and understanding where all the teams are working on. And in particular, I'm excited about the opportunity in front of us. I've spent some time sitting down with customers and understanding what's important to them. Spent a bunch of time last week in Silicon Valley talking to some small startups to understand what's going on in the generative AI space. And there's a lot of excitement about new technologies that are coming and the potential for where businesses go. So I'm incredibly excited and looking forward to the business.
Matt, we will talk about generative AI, but your background's so interesting because you've held pretty long periods of both engineering and sales responsibilities in the cloud market at AWS. Before we were talking about AI, the story with cloud was really clear. There was this massive total addressable market where companies all around the world had not yet transitioned workloads and storage to the cloud. And increasingly, we're actually talking about on-prem being back a little bit. Just talk to me about your strategy for going after that addressable market, the basics of cloud computing.
Yeah, the opportunity ahead is really enormous for the business. If you look out there and you actually talk to most customers, the vast majority of their workloads aren't yet in the cloud. Some estimates are only 10 to 15% of workloads have actually transitioned to the cloud. And actually, we hear from
That's very important, and that's something Andy Jassy talks about there, is that there's still so much to move to the cloud. You kind of can almost think about the cloud as kind of a mature business model, and the reason being is when it comes to cloud, this has been something that's really been on the radar now for a good 12 to 15 years, right? And so a lot of people think about cloud, they kind of think about, that's old school, like that was the hype of, when shortly after I got in the market, 08, 09, I remember cloud was all the talk. This was like 2010, 2011, 2012 even. Everybody was cloud. What AI is nowadays, cloud was at that particular time. Everybody was talking about cloud this and cloud that. What are you doing in the cloud for your business, right? And that was the thing at that particular time, right? And, that was a long time ago now. And so cloud is seen as a mature business, but a gentleman like this makes a very important case that we still got a lot to move over to the cloud for a lot of these companies. And Andy Jassy tells you that same exact thing when you hear him talk.
On-prem being back a little bit. Just talk to me about your strategy for going after that addressable market, the basics of cloud computing.
Yeah, the opportunity ahead is really enormous for the business. If you look out there and you actually talk to most customers, the vast majority of their workloads aren't yet in the cloud. Some estimates are only 10 to 15% of workloads have actually transitioned to the cloud. And actually, we hear from customers that, if anything, they're looking to accelerate that transition to the cloud. If you think about generative AI or other technologies, most customers are finding that it's hard to actually take real advantage of some of these new technologies that are out there if their data is not out in the cloud. And so when we talk to a lot of customers, they see this new era of generative AI as a accelerator for reasons to get their data in the cloud, to put it in a data lake, and to be organized in a secure and safe environment where they can actually go and innovate and deliver value for their business. And so we're actually seeing this as an accelerator. Actually, when I talk to most customers, they're trying to find ways that they can migrate more of their workloads and more of their data into the cloud faster than they ever have before. And so we think that that's a huge opportunity for AWS business, but we also think that's a big opportunity for our customers as they can gain agility and can innovate faster for their own customers once all those workloads are in the cloud and they can focus on delivering value to their end customers.
Alphabet and Microsoft and IBM and all the others might also see this as their opportunity too, Matt. And I'm interested as someone who basically helped build cloud as a business model back from 2005 when you're interning, how you think Amazon and AWS is different at this moment.
Yeah, you're right. So, and as you mentioned, I've been working in AWS since 2005, 2006, since we started AWS. And so if you look about where we're different, there's a couple of things that I would focus on. Number one is we have a lot of experience going and helping customers in the cloud world. And from the very beginning, when we very first started AWS, we said priority zero for us is security. Customers are trusting us with their business. They're trusting us with these critical workloads. And so security is first and foremost. Second is operational excellence. And so we know that for our customers, if we have to be secure and we have to perform in an outstanding way. So performance, security, those are the two things that we focus on. And then we think about how do we help customers innovate? And we really like to partner with our customers. We want to lean in. We want to understand where their struggles are, where they're having problems with their on-prem environments, or where they're slowing down because they're doing too much of the muck, we call it, instead of actually innovating for their customers. And then we deliver a really rich set of services. And if you go look at AWS, we have by far the widest set of services and capabilities that allow customers of all sizes, whether they're startups or enterprises or governments, to go and innovate out there for customers. And so when you have that baseline of security and operational excellence, and then you have the broadest set of capabilities, it's for many customers and most customers out there, it's a no-brainer as to what's the optimal platform to go from. And
So is that no-brainer, meaning you're still accelerating for AWS growth as we see that pivot point in the previous quarter? Are you still accelerating profits too?
Absolutely. AWS is still growing faster than any other cloud provider.
Ooh, I like that. I like that. Ooh, baby. So I was expecting him to kind of shy away from that answer there. See, he's a relatively new person to the kind of the interviews and whatnot, right? Because he just took over this role very shortly ago in regards to AWS CEO. He's worked for AWS, pretty much since the beginning, as he was speaking about there, right? But wow, I was expecting him to shy away there when she's talking about accelerating the business and all these sorts of things, and he says absolutely. Ooh, does that make me feel great as an Amazon shareholder? Yeah, baby.
Platform to go from, and so
wow,
yeah.
Wow.
So is that no-brainer, meaning you're still accelerating for AWS growth as we see that pivot point in the previous quarter? Are you still accelerating profits too?
Absolutely. AWS is still growing faster than any other cloud provider out there on an absolute basis. And we see customers leaning in. And so
that was key also. growing faster than any other cloud provider on an absolute basis. Absolute basis meaning dollar amount, okay? Maybe not on a percentage basis. So you could look at maybe Microsoft with their Azure, and maybe that's growing faster on a percentage basis, right? Or, I don't know, maybe Oracle and their cloud product or whatever, but it was a really small numbers, right? On an absolute basis. So if we're talking billions of dollars, Amazon's growing the fastest of all of them, which you could look at that two ways. You could look at it, percentage basis really matters because you want to get the company that's growing the fastest. But at the end of the day, I'd rather have the company that's grabbing the most market share, right? The most dollar amount.
See, again, this is such early days for the cloud. It really is early days. And so we see massive growth and acceleration ahead of us and huge opportunity for the business.
Wow, that's a big statement.
Matt, since you've been in the job for 30 days, what's your understanding of what a run rate in the billions of dollars tied to generative AI actually meaning? What have you come to see across your desk as that being a business of?
Yeah, and as you mentioned, generative AI is already a multi-billion-dollar business for AWS. And so it is a big business for us today. And when you sit down with customers, I think you look at kind of where this transition has gone. It started out, call it a year and a half ago, with ChatGPT. And everybody thought this is a fantastic technology, and it is, and it was. And then so the first thing that everybody did is they basically built chatbots for their website, right? And so as customers, though, are transitioning, they're trying to say, where's the real enterprise value for me? How am I delivering value to my customers? And so when they think about AWS, they say, I have a platform that I can build on. It's secure at the baseline. It has a bunch of capabilities that I can actually go and build value for my customers. And so we increasingly are seeing customers say, how do they get real value for their business? How are they delivering revenue growth? How are they delivering real cost savings? How are they completely transforming their business that's just different than how anyone has done their industry before? And I think that's the real potential. Even though today it is a multi-billion-dollar business, I think it really is the nascent part of this technology, because what it's capable of doing is progressing so quickly that I think a year, 2 years from now, you're going to see many industries out there have completely changed how they think about work, how they think about delivering value to their customers, and it's a super exciting time for innovation and for technology as a whole.
For our Bloomberg television and radio audiences around the world, we're speaking with the AWS CEO, Matt Garman, 30 days into the job. You know, Matt, an important development of your predecessor was the Anthropic investment. Most recently, the acqui-hire, so to speak, of Adept Labs, which is more focused on non-AWS Amazon. How much do those deals indicate that Amazon's had to bring in engineering talent to work on large language models?
How we think about it is the...
By the way, somebody asked me if you get the founding membership card if you sign up for the 1000X deal. The founding membership card, I got this one still in the plastic here. Yes, you do. Whether you get the buy one, get one free month, or whether you get the buy 4 months, get 4 months free. Yes, you'll get a steel membership card, the founding membership card, sent to your house as well. Once again, that's pinned comment down there to get that deal before it ends for 1000X.
Potential is massive. And we think that if you look at the AI space, there's not going to be one solution for everyone. There's not going to be one model that's perfect for all use cases. Our view is that customers are going to need a variety of capabilities. They're going to need large models to do reasoning. And the Anthropic models, by the way, are fantastic. And the new Claude 3.5 Sonnet model is by far the best in the world right now. And that's fantastic, and we love working with that team.
Big for Anthropic.
But a lot of customers we find are combining those large models with small models, and then they also need capabilities. And one of the areas that we're really excited about is agentic workloads, where models are actually going to be able to call out and do things out there in the real world, not just summarize data or give you information, but actually go and perform actions. And that's part of where we're really excited about the technology from Adept. And so we think that there's a lot of these different components. Many of them are going to be built in-house and have been built in-house with AWS. Many of them come from external capabilities, and we think that there's going to be a really rich ecosystem of capabilities that customers are going to want to build from, and many of them are partners with us, and many of them will provide as first-party offerings.
See, here's the tough thing with Amazon. Here's the tough thing, okay? You know, you look at something like a Meta. Meta's an easy one, just an easy stock to buy because the forward P is so low. 25, you know, you're roughly in the range where a lot of stocks trade at in the market in general, right? But you're getting much better growth rates. So I feel like Meta's just like easy, like no-brainer buy. But when you talk about Amazon, things begin to get a little more difficult here. So if we pull up Amazon, the forward P is at 45, right? We can call it roughly double-ish, kind of where stocks in the market trade at, right? But you got to look deeper than that. You got to look at somebody like an Amazon and say, okay, yeah, it trades at double or maybe slightly over double where an average stock trades at for a forward P. But are the growth rates more significant than an average stock in the market, right? And if we look at kind of current year expected EPS growth, 50+%, next year 20+%, guess what? Much stronger growth than a lot of companies, right? And when you also think about the e-commerce business, I mean, that's another business that still has when does the e-commerce business a mature business? I don't know. I can't even call Amazon's e-commerce business, as big as that is, I can't even call that a mature business yet. I think that's still a major growth business. The fact that they've been able to grow that business in a consumer recession has been very impressive. And so you got AWS, which is still relatively early days, and you got the e-commerce business that is still relatively early days, and you got their third component business, which is very important for them, their advertising business, which is honestly still very early days. And that's where you look at something like an Amazon, you're like, although the forward P looks high, it's actually a great deal and a great value in this market right now, right? So that's the thing you got to consider with something like an Amazon, and it's hard for people to wrap their heads around that, but the stock's actually a deal.
Each ecosystem needs rich infrastructure and energy and that map. How are you seeing the need for energy growing in AWS? How are you satisfying it? There's much talk about nuclear, for example.
Mm-hmm. Yeah, it's a great point, and it does need a lot of energy, and that's why if you rewind even several years ago, we're the single largest purchaser of renewable energy in the world for many years in a row now. And part of that is we saw this coming, and we've been thinking about how do we build up enough power in a sustainable way that's carbon neutral, that we can support the energy needs for technology. And so we think that growth.
I got to be honest, Meta and Amazon are two stocks, and obviously I'm kind of talking my own book here a little bit, right? Those are both big positions for me. But the way I look at Meta and the way I look at Amazon stock is if you don't own those two stocks, what are you doing? What are you doing? That's the way I look at those two stocks. If somebody does not have those in their portfolio, I'm like, why? Do you not like easy money? Do you not like sleeping well at night? Like those are just two stocks that I'm just like, I never worry about those two stocks. Even in 2022 when those stocks were getting obliterated. And obviously, Amazon, I started buying that stock very heavily in 22 and moving into 23, right? Meta was already a position for me, and then I built it into a huge position, right? But those are two stocks I look at, I'm just like, why would you not own those? Like that's crazy to me that people choose not to own those two stocks. And I'm like, do you not think they're going to outperform the stock market over the next 5-10 years? Like, come on, man. Like really? You don't think they're going to outperform the average stock this next 5-10 years? Come on. And so, yeah, those two specifically, I look at it, I'm just like, those are must-owns. Like, there's other stocks I can understand people not owning. Google, the government's after them, right, on several different fronts. I understand if somebody doesn't want to own Google, and obviously with OpenAI, being a potential major competitor, I could understand why somebody might not want to own a Google, right? In Apple, I could understand why some people want to own an Apple stock, right? iPhone revenue's down $5 billion plus in the most recent quarter. Revenue's down about $4 billion in the most recent quarter. I could get it. Like, I can understand why some people wouldn't want to own some of those sorts of stocks, right? Even a Tesla. I understand some people don't want to own Tesla. They look at Tesla's valuation, right? They look at Tesla's valuation. They say, this is just too darn rich, right? Tesla's trading, let's see, at 95 forward PE, roughly 2-year out forward P58. I get it. Like, I understand why somebody wouldn't want to own a Tesla. But for Meta and Amazon to not own those stocks is ridiculous. It's ridiculous. It's preposterous. Like, to not have those as core positions to every portfolio is mind-blowing to me. Crazy. And people wonder why, they have trouble beating the market. And I'm like, how could you not own two of the greatest companies out there that are just great performers year in and year out. That's Meta and that's Amazon.
To be significant, and there's a lot of work that's going to go forward in continuing to make sure that we have enough power to power the workloads that our customers need. But that's part of what I think
I could even understand somebody not wanting to own Nvidia, because they look at Nvidia and they're like, well, it's at a 53 forward PE, and I'm not sure about, it's going through a chip cycle, and I heard these chip cycles usually end in crashes. Like, I get that. But Amazon and Meta, it's just so easy to own those stocks.
The table.
Easy.
We've spent a lot of time getting good in this space. We've spent a lot of time thinking about how do we make sure that we have enough sustainable power? How do we make sure that we have enough components in our supply chain? And how do we manage that spend? As you mentioned, it's a pretty significant infrastructure investment. How do we make sure that we manage that in a reasonable way so that it's good for the AWS business and that we're being responsible with how much capital we spend, but we can also grow the power footprint that the world needs in a sustainable way? I think that's an important thing of what AWS brings for people.
Can I ask about, therefore, that profitability? Because there has been marked improvement in profitability. But the question is, at the time of investment, are you managing this by cutting costs, by ultimately having let go of people? Are you managing to equate it more by just more higher pricing for these AI-related services?
No, we think about this business. Look, this business will have ebbs and flows over time, particularly as we make large financial investments in the future, whether it be large investments in power or data centers or components and things like that. So the profitability of the business will go up and down over time. Yep. But long term, we think that AWS will continue to be a very profitable business for Amazon. But for us, it's all about investing in the future and making sure that we have the right team, that we have the right setup in place, and we have a long-term vision of what this business is going to be. So we're not thinking about particularly short-term, but we're thinking about how do we really go after that long-term potential so that AWS continues to grow at a rapid rate for many, many years. And we want to make sure that we have that right team in place, we have the right infrastructure in place, and we have the right investments in place so that we can be there for customers when they need us.
Matt, we've dedicated a lot of time on this program covering your proprietary silicon efforts, Trainium, for example. So we've done that. Could we focus on Nvidia and discuss with me your relationship with that company, how supply of their AI accelerators is, and whether you actually will give us a forecast of how many accelerators you think you'll take from Nvidia in the next 12 months
as
or
much as he'll
24?
give. Dang.
It's a great question, and NVIDIA is an incredibly important partner of ours. They make a fantastic processor. They have executed incredibly well and have by far the world's best technology in this space, and have for the last couple.
By far the world's best technology in this space. Not they have the world's best technology in this space. They have by far, very important. When the Amazon Web Services CEO is telling you a company has by far the best technology in the space, I think everybody should take that rather serious. Rather serious.
And we believe that AI technologies are going to rely on NVIDIA and GPUs for many years to come. So we think that they're a super important long-term partner of ours. In fact, we're getting deeper and deeper with them. Jensen has said on stage that AWS is their technology partner that they're building their own models on top of. They believe that, and they've seen that AWS has by far the best performing technology, whether it's on the network side or the availability of the GPUs, which actually is a super important part of building models. And so NVIDIA trusts AWS to go and build their long-term models. And we lean in on NVIDIA for that too, and learn about what's working well, what in the next generation technology will they need from our data centers and networking. And we really have a great collaboration there to ensure that our AI customers can jointly take advantage of the best technology that NVIDIA has to offer and AWS has to offer in a combination so that they can really deliver the best technology for the world.
Yeah, huge statement. Great statement for NVIDIA as well. And if you hold NVIDIA stock, when his AWS CEO comes out and says this company has by far the best technology, I mean, I think that's pretty darn powerful, okay? 1000X sale. It's ending very soon here. If you want access to that sale right before it ends, click the pinned comment down there. Once again, we got a buy one, get one free month offer. And then we also have buy 4 months, get 4 months free. So it depends on how in depth you really want to go with the product overall. Once you start using that product, you're not going to want to switch up. I can tell you that. It's absolutely phenomenal. I use it on a daily basis. And then once you join us in there, we'll be able to send you over your Steel membership card. Alrighty, guys, much love and have a great day.